Hi, everybody. Hello, Lions. How are the face Lions doing today? Patrick, FX Glenn, Zig, how are you? Yasser, Vin. Nice to meet you, Lendo. Everyone with me? Hi, Simon. How are you? So I want to start with the dollar. Blake started talking about last week the compression building up here. I just looking at Greg's count, could take it down under 93. So I think that we're getting closer to that. Nick had some areas that are worth considering. We're there at one of them right now at this 9327. Next one's at new lows, taking out this 92. I think we're within a few days of some type of reactionary low. Here's the chart. So what don't I like about this low? We had very low RSI readings. There was a little divergence. Maybe next time down, just to take out the 93 handle, we get something. Although some people would say that perhaps we're starting here. I'd like to see one more capitulation in the Dixie. See what kind of off number we have on a weekly for it to prove itself. So a 2-week reversal is going to come in at 93.86. It's doable. The 200 week is 92.30. Euro USD, I'd still like to see on the shorter term time frames one more high to attempt it. Right now it's looking like a double top, right guys? Right now these guys who shorted it here or who shorted this rally, they have their stops over this high. It's my belief there's going to be a stop hunt over this high before we get a turn. That's my thesis, that they want to shake out as many top pickers as possible. Right now, top pickers have hope that we didn't take out this high on this recovery, still think new highs are coming. Give me a Y if you're with me with my analysis. Hi, Yasser, how are you? Thank you, Jack, because you're a pro. Patrick? Okay. And I also want to point out something. I want a round of applause for my teammates. Can you guys do it? Do you have a clap icon? Because they worked their butts off all weekend. All weekend. And the community wanted more pairs to trade. So will you go to the traffic light page now? Oh, no, that's not all of them. Oh, that's not all of them. Those were covered already. Oh, look, here's some new ones. Look, some new, oh, Euro Kiwi, Pound Aussie. What do you think, guys? Pound Aussie. You guys look, Pound Kiwi. All right, so 9 new tickers have been added. What a great job by Blake and Stelios and Steve and Greg and Nick, giving you more action. It's like the casino has opened more blackjack and baccarat tables for you guys. So now it's an even better value than it was before. So just click the link and get started on your trial. You're going to have a lot more pairs to trade, a lot more research done by the team. Okay? And you know what? It's 9. And what's 9? 3 threes. So I didn't, you know what I think about threes. So you had 3 threes. So I would say that we're now complete at ForexAnalytix with more than enough ideas, actionable analysis for you to trade, whether or not there's a pattern in play or not, with all the different looks from different disciplines, from harmonic Elliott, basic technical and candlesticks on all time frames, 1 hour, 4 hour, daily, weekly, monthly. So you should be able to find a lot of things to do. I'm not saying that it's the right thing to do to trade every day. I'm a big believer in less is more. but now you have more to cherry pick from. So I'm going to hand it over to Blake, and congratulations for what the team has done. Blake, it really looks great.
Thanks, Dale.
Traffic light page is bulging at the seams.
Awesome. Hey, you know, I'm trying to, I was trying to do something, but I can't do, oh, shoot. That's what I did wrong. I'm sorry. Hey, do you mind speaking for just a few more minutes?
No, sure. I'll show a few things. I'll show a few things that I'm looking at here.
Thank you.
No problem, buddy.
Give me like 2 minutes. All right, thanks, man.
You've got it. Okay, so this would imply that there's probably going to be, I know Steve loves the Swiss, and you made a lot more money being long dollar Swiss and trying to top pick euro. That was a point made by Steve Volge. Oh, I'd say he said it 1 billion times. Wouldn't you, Steve? So I know that's one of your favorite numbers, 1 billion. So he talked about it 1 billion times. So if we're setting up some type of correction in the dollar, you know, perhaps we get this pullback here in Swiss during that time frame. And the crosses, I can't short the crosses down here. It may be setting up a buy. You know, we got a little, looks like a wedge. So if the dollar's going to rally, that means that we should get some type of bounce in US dollar yen. So we should be getting closer to a low in the yen. So just thinking right here. Nice little wedge. Nice little wedge here. You could draw it, it could be a big one. It could be a little one. But this to me looks like the boot. And I'd be looking for reasons to buy it wrong under 44.80, but perhaps we get this move here over this boot. Everyone with me on this on the guppy? So, you know, you could almost call this a 1, 2, 3, and we'll have confluence at this moving average, a couple of moving averages coming in around 45.40. So I'm thinking there's a play to the upside in the guppy. For a while up here, and you guys know, you know, we were negative and we caught a good piece of this. And the euro yen has already made new highs. So I'm thinking that we're getting closer to yen pair longs again, especially the guppy's been the weakest. Euro yen's been the strongest. So perhaps we're going to run one more time above 30.60. I'd say there's a few stops unless this was a stop hunt here. And keep in mind also, we have NFP on Friday on the pattern play levels. You don't see it on the app. So you're not seeing the pip on your app. You're just seeing the levels. Entry and levels. Okay, I'll let the guys know. Thank you, Jason. Aussie, you know, even if I can't get bearish because of this. Okay, so I want to see where all these pairs are when the Dixie makes one more low. Okay, so I'm going to key shorts. But I'm going to key shorts and currencies off the Dixie. So looking for one more low in the Dixie, and we'll see where everything is at, and short the relative weakness would be my idea. Hi, buddy.
Oh, all right, Dale. Sorry about that. I had to just do a couple of things.
I figure you're tired out from doing cannonballs in the pool all the time.
No, I let the kids play in the pool. Yeah, no, yeah. That's the pool's like, you know, in Arizona, it gets so hot, and so our pool is literally like, yeah, it's like bath water. It's really warm.
I actually love that.
I do like it initially, but 2-3 months later, I'm like, oh God, I just want it to be a little more. And so this is the end of the month, and so this is we might get a little bit of volatility today, but we haven't seen a whole lot of volatility up until this point. Here, I'll go ahead and take over from here. But okay, I hope everybody gets used to this new. It's always a change. I've done webinars for so long for traders, and that first couple of weeks of adjusting the time, it doesn't matter how often or how much you tell people, they don't. It's like it doesn't register, or it just takes them a while to get used to it. I'm not too sure what it is, but it'll take a couple of weeks before everybody re-engages and goes, oh man, the time changed, oh crap. But one of the things that we did this weekend, as you were mentioning, is we added a bunch of new tickers. So we have, we added, you can see all these, I don't want to call exotics, but they're not exotics. It's more just crosses. Aussie yen, New Zealand yen, Canadian yen, Euro Aussie, Euro New Zealand, Pound Aussie, Pound New Zealand. We added back the Aussie New Zealand. We added back in the US dollar, Norwegian krona. So we got a lot of currencies that we tend to talk a lot here on the webinar, even though there isn't anything moving in most of those. I mean, I look at like the Euro Aussie, Euro New Zealand. I mean, they're stuck. Yeah, they are stuck. I want to talk to you guys a little bit about the pound pairs. We're going to talk about the Pound New Zealand and the Pound Aussie really quick. And the reason why I wanted to talk about them is because this week we have the interest rate decision from Bank of England. So we have the BOE rate decision, and believe it or not, the Bank of England might be raising rates. And it's entirely possible that the Bank of England raises rates, and if that's the case, the cable could actually make a move. And so if you look at the Pound New Zealand, excuse me, hold on one second. Okay, sorry about that. So if you look at the Pound New Zealand, I mean, we're sitting on some pretty good trendline support here, and you can see that we're sitting right on that support level. There's a good chance that we can use this area as a pivot area for longs. You look at the Pound Aussie.
Remember, I brought that up last week. I think you thought that Euro Kiwi would have been a better buy, but I wanted to ask you again, do you think that this pair will go up, appreciate in value, if there's risk off or risk on? Right?
Yeah, risk off. I mean, it used to. I mean, that was the old correlation,
okay.
I mean, well, it's not that correlations don't work. They come back in flavor, in vogue sometimes, and it's we haven't had risk off really, so it's hard to.
Yeah, who could remember?
Yeah, well, yeah, and dynamics have changed. We don't know if the market goes risk off, and when we see some selling in asset prices, maybe commodities are bid as a result, because maybe the market's going risk off because there's more inflation. And I don't know. I don't know what the market is clinging on to.
Well, it kind of looks though here, Blake, that even if it's bad, and I know there's some negative looks on FA, like lower targets, but it does look like it's not complete, that there's at least one good rally left, even if it's bad. Is that the way you feel about it?
Yeah, I mean, you mean as far as S&Ps go?
No, the pound, what we're looking at right now.
Oh, the Pound New Zealand. I mean, I mean, shoot, this thing's trading so heavy. I mean, it's just on support. I mean, but there's nothing, there's not a lot stopping it from hitting a new trend low. Yeah, there isn't. But I think it's important that we keep a close eye on it this week and see how the pound reacts. One thing that really worries me about the cable in general, and I know I mentioned this during the week ahead video, is we are really struggling at resistance. I mean, you think about how weak the dollar has been overall.
Good point.
And the pound hasn't followed suit. You know, the pound dollar's yeah, it has been. It's been very underperforming. You can see it just struggling here at the 38% retracement. And this is following Brexit. We just have not been able to launch higher. That's not saying that we can't. That's not saying that the pound can't lift. But it has been struggling as of right now. Maybe the market just needs a good reason to buy cables and buy the cable and maybe
just a dollar or the dollar rebound, Blake. I mean, say if the pound can't rally with dollar weakness, what's going to happen if the dollar catches a bid?
Yeah, well, that is the thinking. But then again, again this Thursday we have, maybe the Bank of England is that catalyst that drives the pound finally higher. And I don't know. I'd be interested to hear what Adam Button has to say about what he thinks the Bank of England's going to do this week, because the pound has been at a standstill. It has not followed suit with dollar weakness.
I'm going to ask
and that's going to be
great question. Great question.
I mean, with this week, I think it'll be a good question for Adam. So anyway, just looking at the pound New Zealand, it's sitting on support. The pound Aussie, I mean, that pound Aussie has really come back, and for all intents and purposes, we broke this wedge, and we've come back down. We've retraced quite a bit, but we have to get back above like 166 for it to really, turn bullish again. But, it's nice to have these, what I wanted to point out on ForexAnalytix, and even though they're not doing anything right at this moment in time, like all these crosses can start moving. And when they move, I have to tell you, they're some of my favorite currencies to trade. With the pound Aussie and pound New Zealand, and they, excuse me, sorry, it's getting up early, starting this webinar a little early. It's Monday. It's a little tougher than I thought it was going to be. But having these crosses available is in my opinion, it's great, because it provides more opportunity for our traders that are just looking for things to do, because sometimes the dollar pairs just aren't moving. And right now we've seen such a big move in the dollar. I don't know if I would necessarily be comfortable, and you guys know this, I don't know if I'm necessarily comfortable actually shorting the dollar or right now. Now let's talk about the euro dollar really quick. And this is something that hasn't happened yet, but it's something that's on my radar that I'm, I know I've mentioned it before, but I want to talk about it again, because we're not too far off right now. Okay. The euro dollar is up near its highs, and we are in breakout territory. So just keep that in mind. We're in breakout territory. But this dotted line right here is the spike low from 2010. Okay, if you go down to 2010 right here, all right. Yeah. It also, you can see we have a couple extensions, 127%, 161% extensions coming in right around 119. I'm looking for another leg higher in the euro dollar, and when we get another leg higher in the euro dollar, I am selling into it. The strength. Yeah,
you said this could happen about 2 weeks ago, and you showed this line, this dotted line. And you said, euro was lower then. So that's your, it's almost like you're salivating to have the opportunity to do it up there.
I am, because if you think about this compression area, this multi-year You know, this is a multi-year compression, right? Okay, what we've done thus far is we've stopped out, or are in the process of stopping out, a lot of traders that are short. And if you look at the pair right now, you know, the pair it may have stalled, but it's not pulling back either. So the longer we sit up here, the more likely it is that we're going to make another push higher towards the dotted line up here. And that's why I'm waiting for a move up to like 118, hopefully like 118.50. And matter of fact,
it's only 120 pips away. That's very doable.
No, it's extremely doable, especially if the market just decides it wants to start, you know, doing it right now, if it just wants to take off. But I haven't put out my orders yet. I had an order out there from like a week ago, and then I canceled it, and I need to put my orders back out there just in case we make a run and I'm not in front of my computer. But if we make a run above 118, I'm going to start legging in on the short side, because I think the risk from here is maybe about another 100 to 150 pips. And I don't mind making 100 and, you know, 100 to 150 pip stop if I think this is a false breakout and eventually we're coming back down to 113, because, you know, I mean, you risk 150 pips to make, you know, 500 or 600. I'll do that all day, every day. You know, it's just, you know, you got to be there for it. And I want to make sure that I am there for it in case we do make that run up towards that resistance. So that's kind of what I'm looking at in the euro. And I've been waiting for this. And you're right, I have been salivating to a certain extent, waiting for this move to happen. But it hasn't happened yet. I mean, we're up there. We've gotten, you know, past resistance, but we haven't made that, you know, that like last gasp push. And that's what I'm really, really waiting for and hoping for. A couple other things that I'm looking at, and we have the Aussie New Zealand here, and this we hit the 200-day moving average yesterday, and I sent out an alert in Asia last night that we were testing the 200-day moving average, and then I actually picked up the Aussie New Zealand just because it was intraday. I wanted to do it more in Asia, not like a staying in this trade for a long period of time. I only scalped it for like 10, 15 pips or something. It was just very, very much when I figured it wasn't dropping below 106, I just picked it up and sold it, you know, just really quickly. But I want to point it out because we did respect the 200-day moving average, and we're holding it, and we're mid like triangle. Okay. Yeah. Ultimately with this Aussie New Zealand, I'd love to be a buyer down here around 104. I just don't know if we're going to get it. And what I'm looking for initially is a move down to the 618 right here. And if I can pick it up down here, that's what I'm hoping to happen is there. Or, you know, if I get really lucky.
If it held there, Blake, instead of going back to the trend line. Maybe a lot of people are waiting for it to go back to the trend lines.
You know, I think a lot of people probably are, and you know, I think for me, I would actually prefer it to come all the way back down here to 104, because then that means it probably shook out a lot of longs that, you know, really thought we were breaking higher.
Right.
But I want to pick it up down. I want to be a buyer. Bottom line is, I'm just looking at a couple different prices, and I really don't mind buying some at 105.50 and buying more at 104. If that's the way I have to play it, then that's the way I have to play it. But again, you know, what I'm showing you is what I'm planning on doing. You know, This is like I'm planning on this all happening. Whether or not it happens, you know, I don't know, but I'm planning on it. And so therefore, you know, I'm giving myself enough room to take advantage of it if it should drop to those levels. And because that's what a lot of people don't plan for. They go, all right, well, okay, I see what Blake's talking about. I'm going to buy it at 105.50, and then I'm going to buy it at, you know, 104 if it gets down there. No, what happens, they get down to 105.50, they take too big of a position. Right. It continues to break down. they've taken too big of a position, so it hurts too much on the way down. They're like, oh, I got to take a loss, and then you take a loss, and then you buy it down here again, and then you find out you're actually wrong, and then it drops down to 103, and then you've taken some really big hits on the way down. But for me, I plan for it to get all the way down to 104.
Right.
So even if I bought a little at 105.50 and it gets down to 104 and I'm adding, I'm still not putting myself in a situation where I'm in a bad situation where I can't sustain that type of loss. You know, I prepare for the worst, hope for the best when I'm trading. And so you have to prepare like for the worst case scenario at all times, because if you don't, and you're not properly planning, because the markets, you have to assume the worst is going to happen. You know, you have to assume that, and how is that going to affect your bottom line? And that's the way I look at it at all times.
The fundamental bullish fundamental backdrop of this trade that you went into some very good detail on, I don't know, about a month ago, that's still holding together. You know, that New Zealand will suffer more if there's a China problem than Australia.
Yeah, well, I still think that is an issue, and I think that as you know, the easy money policies globally start to contract, that all this money that's been put into like the New Zealand like housing market, especially by the Chinese, I think that that's gonna suffer a little bit more than Australia, so I do think that the Kiwi is more susceptible towards a Chinese slowdown personally, and I think it's much of it's already priced into the Australian economy already. But that's been my long-term thesis for the Aussie New Zealand, and I don't. But now you look at like the RBA. I think the RBA could be setting up to maybe have overshot to the downside as far as monetary policy goes, and they might be a little bit more aggressive, more so than New Zealand on raising rates moving forward. You know, typically the RBA versus the RBNZ, the RBNZ, which is the Royal Bank of New Zealand, they tend to be a little bit more aggressive with monetary policy than the Reserve Bank of Australia. But I think that it may be the other way around as we start tightening monetary policy. So we'll see. You know, we'll see. Yeah. We'll see as it goes on. I think that the RBA has the potential to be more aggressive. Another thing that you guys should be watching, and before I turn it over to Steve here, is watch the peso. I'm already long, and I've been long. I've been buying this, ever since we were down here at this 161% extension, this one right here. Mm-hmm. I had to pull it off because I was doing some other analysis for it. I've been long the peso, but really if we start getting above 1290 or 1790 and really above 18, it's going to start squeezing. And remember, the dollar has been weak, but it hasn't been weak against the peso. If for people that have been shorting the dollar, they're probably looking at the dollar peso going, what the hell? How come the dollar peso isn't selling off, and so the risk is if the dollar starts to get a little firm, it could drag the dollar peso higher at this point. So I would be watching the dollar peso near term, because we're getting towards some pretty key resistance, and
even a 38% retrace could take it to about 1930, I think. From the high,
yeah. There's if you take like the last move here, and you drop this down to the lows. Here, let me make it a little bit more visible. The 38% retracement comes in at like 118.15 whatever.
Mhm.
But yeah, if we squeeze past that, I mean, it's really going to start taking off. There's a lot of work to be done for that to happen, but I still think the U.S. dollar Mexican peso looks squeezable. Because what else is interesting? If you watch the price action on Friday, it squeezed past 17.80 on Friday in very thin liquidity, and I was a little worried about that because you know, it did this here. Let me show you. On Friday, we squeezed above that resistance, then we came back off again. I'm like, okay, I need to watch it carefully to make sure it doesn't start selling off on Monday, thinking that, okay, it took out all the stops above those highs, so now we're going to reverse. It hasn't. It's been actually holding up very well, which makes me feel that the market is still extremely long pesos and short the dollar peso. So therefore, I think that this squeeze is only beginning at this point. So.
Like it.
Yeah. So anyway, I don't. Steve, are you here?
That's what I think.
All right. How's it going? How's it going with you?
If we exclude Jason's adventures during the weekend, okay.
Yeah, your son has been giving you quite a bit of issues, hasn't he?
Yeah, he's a little bit sick, the poor guy.
So is he feeling better?
Today it seems to be better, yes.
It's always tough when you have kids, especially when they're at that age and they're well. It's actually, as a parent, anytime your kids are hurt, they're sick, and then you feel like there's nothing you can do. It's a feeling of helplessness. It's tough.
Indeed.
It is tough.
And Steve is fairly new at this, right?
Yep. And you know how it is, Dale. It's not something you can prepare for.
No, you think you could, right? You know, it's
I think that's the biggest illusion out there.
Yeah. Well, every blessing is a burden. Every burden is a blessing, Steve.
Exactly. There is an ancient Greek saying about that.
Yin yang. But you know, it would be a blessing if it didn't matter to you when your child was ill, and because you loved the child so much. So it's a burden when it's like that, but it's also a blessing that you feel that way about somebody, that you actually feel somebody else's pain, another human being's pain, and an extension of yourself being your son. So that's a good sign. You're good. You'll be a great father, and and you know what? Your son will be a great chartist. That's my prediction.
I want to believe so. If of course he's interested. Because you know how it is.
You'd probably have him charting on an iPad already.
No, at 16 months of age, no, not yet.
A prodigy.
Yeah, that would have been too much probably. Okay, by the way, before we start the analysis, which we're going to imminently do so, Blake, are you done, mate? Should I take the screen because I want to?
Yeah, go ahead.
Okay, I want to show something to because our friend Jason asked about how he can find in the application. Can you see my screen, by the way?
Yeah.
Okay. So he's asking.
I love this, Steve. The people can actually see what the phone looks like on like the app looks like. This is awesome.
Indeed. So he's asking how he can find the levels for the patterns in play, and the issue is that you can actually drag. If you see, you can drag to the left, and the same applies to the active tickers in the application. If you drag any ticker to the right, sorry, not to the left, to the right, you can see more information. Like, for example, here you can see the support, resistance, bull bear line levels, and if you do that to an active pattern in play, you can see the entry, target, and invalidation. So I think, Jason, that's the best way for me to answer your question by just showing you exactly how to do it, right?
Yeah. Nice.
Yeah.
What a cool app.
Yeah. Also, this is the beta of the application, by the way. I mean, it has some new stuff as well. This version is going to be what I showed you. Of course, is not something new. It exists in the current version as well. So, for whoever of you is a member of ForexAnalytix and you don't already own the app, it's for free. Actually, you just need to download it. Go ahead and do so. It's very helpful. You also get push notifications, etc. You actually get almost everything you get on the browser version, but along with push notifications, as I said, and obviously it helps you while being mobile. So,
hey Steve, what I've never tried, and I don't know. When you're looking at the app right now, if a push notification is sent, how does that look on your phone?
It looks like an internal notification. So a little box is going to appear in the middle of the application, like a pop-up. It looks like a pop-up if you are in the application when it happens.
Okay. All right. Yeah. I've never actually, since I'm always the one, not always, but since I'm always sending out, I'm sending them. I don't really know what it looks like because I'm usually, at the admin pushing out all the stuff. So interesting. Okay.
Yep.
Who else has technology like this? I don't know. Not many people.
I think among other things having to do with technology, I think we are far above competition. But for me, technology is just a means to deliver a product. You know what I mean? It's extremely important. But if the product, if the product is not,
if they were all lousy ideas, I bet people would have to have their phones repaired a lot.
Yeah. So if the product, if the product isn't worth it, the technology isn't worth it either. What I'm trying to say is that the most important thing is that, having a good product, and of course, if you can use good technology to deliver it, at a better way, and at a more effective way, and make the life of the subscribers even easier, that's good. But I think we have the full package. I mean, both the best technology and I think the best and delivery method and the best analysis. So that's what's important. But let's move on. I mean, this was not an advertisement. Genuinely answering the question of our friend here, who is all obviously a subscriber. No problem, Jason. My pleasure. So we can go ahead and have a look at analysis. Zach, thank you for your comments, and happy to see that you like the new pairs. So let's have a look at the markets. Needless to say that the markets are quiet today. So, not many things are moving, or anyhow, we don't see yet any big moves. Most probably from what I'm monitoring, one of the biggest movers is the Kiwi. And both the Kiwi yen and the Kiwi USD. As we said on Friday, we had a rejection from the 127.2 of this move lower. This was a very strong candle, and we see some continuation today. Of course, this might end up being another bull flag. So let's be very honest. Currently, we don't have absolute confirmation, that this is some kind of a tradable high. But definitely the risk reward is still there, since the high was at 0.7560, let's call it. And we're currently, not even 100 pips below it. Even if this proves to be a correction, I truly expect that we can easily test, this breakout level, which is at 0.7375. We already have a pattern in play in the Kiwi yen. The Kiwi yen is one of the pairs I like most. Why? Because we got this triangle. We had said that, from the triangle, we did expect another push higher. We did get that. We incrementally made a new high above this double top. And we're now breaking again below, within this wedge. And most probably, break below the wedge as well. Is going to accelerate and might easily come down to retest, this zone of importance, which is roughly around 500, 80.50. So that means that, the Kiwi yen is behaving very nicely. Blake, it was you that put that pattern in play, correct? If you're still here. Yeah, I just checked it. It was actually Blake. So I actually like this. And you know, I think it has very good chances of actually working, you know, very nicely.
If it pulls back down there, Steve, would that be kind of like a cup and handle? Would that we need to form the handle now?
Where? Tell me again, mate.
In Kiwi, if we pull back to those targets, like
easily,
so
and you're absolutely right. That's a good insight, because what Dale says, for people that that didn't catch that, he says that if we see a price action like this, then this will prove to be a cap and handle, which is a continuation formation, which means that if actually that happens,
a huge move.
Yeah, then you should expect
88.
Yep. Then you should expect a strong move higher from there. Okay. So yes, that can prove to be a correction, but even if we get down to here and then come up and retest for the 4th time this zone, you know, have you ever heard of a quadruple top formation, Dale?
They don't work.
Exactly. You haven't heard of it because, you know, this kind of things happen only in theory, you know what I mean?
Right.
Yeah.
Triple bottoms sometimes work, but triple tops.
Yeah, but yeah, you know what I mean. So if indeed we do get a correction and then we come and test this again, this is going to be a very clean cap and handle formation, and cap and handle formations are continuation formations that will project a much higher target than you know, than I even drew here. Actually,
you could even take it from the bottom. Yeah, from the bottom. It's also, you could call it an ascending triangle, which is a reversal formation.
Correct.
Just like a descending is. So it's an ascending triangle if it breaks out over there too.
So the point you're making, and I'm in total agreement with that, is that in the short term, looking for a correction in the pair looks like a good trade. It definitely has the reward to risk ratio there, but do not forget that, you know, even by zooming out, you can see that especially if we break above here, this is a very constructive pattern. Okay, so we even have a friend, and you know something, we really enjoy and feed from criticism and I mean constructive criticism and exchanging arguments, etc., etc., etc. We've had a friend. They told me that, you know, he was posting on our YouTube page on one of the webinars that we shouldn't advise people to be short in the Nasdaq, which we never did that. But you remember that we were looking for the short setup in Nasdaq that indeed did work and gave us that. And you know, he's been saying the same about, you know, the Swiss pairs, etc. That you know, we shouldn't be educating people to go against the trend, which we have never done that, because this is another example of that. As you see, in the vast majority of the cases, we make clear what is the short-term view or outlook for something and what is their longer-term outlook. And you know,
well, you know what, he needs to subscribe, Steve, because if he pulls up the traffic light page, he's going to see the arrows. And the arrows, you know, the arrows are our bias. And, you know, whether they're straight up or at an angle, whether they're green or red. So we're always talking major trend.
Exactly. And that's why we also...
But we trade within a major trend if there's counter trend opportunities.
Exactly. I mean, there's absolutely nothing wrong as long as people understand the difference. I mean, that you trade counter trend being extremely nimble and with very tight risk, and you trade with the trend, you know,
more aggressively.
Exactly.
So maybe you trade small. Say you're a 2-lot trader, and you have a counter trend trade. Maybe for counter trends, you just do a one lot or two half lots.
You might even do double than what you would do with a trend, because it's not only about the size of the position, it's also about how, I mean, let's say that you saw this candle in the Kiwi yen. Okay, let's give an example. You saw this candle in the Kiwi yen, and you say, okay, look at this. This is an area that has rejected us how many times? 1, 2, 3, 4 in the past. And this is a mature move higher, okay? And I now see, let's say, a complete formation. And now I see a dark cloud cover.
And then you see the divergence under 70.
And you see the divergence as well here, a reliable RSI divergence. So you have.
Then you see a false breakout. Yeah,
yes,
you know.
You have at least factors of confluence. And you say what? Where did we close the day? At 83.30. Where was the high? At 83.90, roughly. So that's what, it's a 65, to be exact, it was a little bit higher. So it's a 65 pip risk. I mean, if you know you're risking 65 pips, even if you use a big position, you still have a very, very, very tight stop loss. So as long as you know what you're doing, and in this occasion, you will have already been in the money more than your stop loss would have been. Okay, so even now, today, as we speak at this current moment, you would be able to say, okay, I'm taking 50% profits, which means that the stop loss on the rest of my position is going to be free, because I just took more profits than I'm risking for the rest of my position. And if this brings a rainfall or more downside, sure, I'm going to make more.
You're still there.
Yeah, exactly. There. So it's not about, it's not a problem risking and trading counter trend, as long as you know which is the proper way to execute it. And as long as you are fully aware that this is a counter trend move, because of what? It's everything in life as well. And this is one of the main things I tell to my wife, when she gets disappointed with people or whatever, and I will be telling my son as well. Everything, even your relationships with people, is about proper management of expectations. If you have the right expectations, you won't get disappointed. You know what I mean?
Right. How about none?
Yeah. So if you're trading counter trend and you're expecting or you're hoping to see a 500 pip move, then you have a very high chance of being disappointed. But if you're looking, for something much less, and it might actually end up being more, because sometimes the trend does change, and you might have actually shorted the top or went long the bottom. Then whatever extra comes, and Grega has been saying it here as well a lot of times. You remember how many times he said minimum expectations, and that's what you should do, especially when trading counter trend. Okay, so I think we already had a look at these pairs, and I think it's quite clear. The USD CAD is also, because I know a lot of people here are monitoring it, and I'm really hoping to catch a bottom, which in this case I've advised against. I mean, of course, this is one more of the situations that there will be a rebound, and we might even see a rebound from here, and there will be some pips to be made. But as I've told you plenty of times, the first reaction higher is going to be a bull trap, and you should expect at least one more push lower. So okay, this ideally would be the perfect level for a recovery. It was the low here, so we might see a move up to 128, even up to 130. Personally, I doubt we're going to see a move up to 130, but you never know. But even after you see that, I'm expecting a move lower to complete 5 waves on the extended third, and then a bigger recovery. The second recovery, for example, might be up to 130, and then another low. So I think things are quite clear here. We might get a rebound. We might even get it from here. This is the 4th day that the pair is striving to hold that low. So if you see some kind of an acceleration and you're already long, you know exactly where your risk is. If you see some kind of an acceleration, 128 is a level that you should be happy to see, and probably then get rid of your longs. And
if today's range holds, Steve, ideally what I'd be looking for, since it is an inside day, I'd be looking for today's low to be taken out and look for some type of outside candle to the upside for a good signal.
It is very likely. It is very likely. This is a tricky market, and we've said it many times. You've seen it in action, me doing it as well. When you're trying to time a top or a bottom, the importance of having an extremely rich reward to risk ratio is the fact that, statistically speaking, you cannot have a success rate more than 50%, no matter how good you are. You might be right like 30, 40% of the times. But since you're looking for a reversal, if your reward to risk ratio is at least 3 to 1 or 4 to 1, which is easy to happen when you're actually looking for a big reversal, then it's okay. You can be wrong even more than 50% of the times. So, you know, if you're looking for a bottom in the USD CAD, which I don't think you should be looking yet for it, we will see a rebound, as I said, but not for the bottom yet. You should be willing to take 1, 2, 3, 4 tries, perhaps. Okay. But you need to have the proper criteria, the proper confluences, etc., that will give you, you know, that will at least somewhat increase the odds in your favor. Same thing is happening with the USD NOK. The only difference, and this is a divergence, the USD NOK has broken down below the previous low and below an important area that has held for 2 years. Okay, so that's
the NOK is a joke, bro.
NOK was a joke up here, actually. Yeah. It's extremely, and you see, the NOK reminds me of the Aussie USD. So many people for so much time and so many blown up accounts were looking for the Aussie USD to break down until it finally did so. Same thing with the NOK. Sometimes you need to be patient, okay? But I think that this is the real deal that we see here. Okay. Last year for one, loving it. Okay, thank you, Simon. Happy that you love our service. Palladium is going to new highs. Thoughts? Yes, I totally agree with you. It is very likely, and I'm going to show you exactly why it is. There we go. Because this wedge didn't play out as we had seen. We had taken some profits when we sorted it there. And I think that what is in play here is the red channel. So it is not unlikely at all to see another attack at the channel top. Okay. We had, when we saw this breakdown, we had marked this area, and I had said, like, don't be too fast sorting the palladium, because simply, in my opinion, as long as we hold the 830 zone, which was also, you see how nicely technicals work out. We were looking at this wedge. Okay, we played it here, we got some profits out of it, then we found support at the bottom of it, we moved decisively higher, and then we started correcting lower. I did believe that this would be a correction because we had this area, and I said a long time ago that as long as this area is holding, you know, the metal remains constructive. And this exact area is the one that held. Actually, you can see here very clearly that we had an A, B, C. C was a 5-way move lower. 1, 2, 3, 4, 5.
I remember that.
And now look at it, it's still constructive. How do I know that? Because we have 1, 2, this is clearly a third wave. How do I know this is a third wave? Because we already have 1, 2, 3, 4, 5, 6 consecutive days higher. Right, so if you want me to be even more precise on what I think is going to happen here, something like this is going to happen here. Something like this is going to happen here. So yes, Dave, I'm 100% with you. The question is, would I be long? Here, yes, I would be long. Here, even if you go long, here, which I don't like it because I don't like the risk reward, I still think you will have more upside left. So I still think you can make some profit. But the risk reward is not here because we are likely not far away from the end of wave 3, okay, which is the easy move higher. So I would rather see an exhaustive move on the channel and be short than the opposite. But
you have
yes,
time for silver?
Of course.
Someone was asking for silver, and I actually noticed a harmonic look from Nick that after a pullback, she's got some lofty targets up there. I'm sure the subscribers know.
I think that silver's move higher, which I currently see as a 5-wave move, 1, 2. First of all, let me say again, okay, I know this, you know, this is my idea and my approach on this market. You don't have to share it. I completely ignore the stupid wick down here because this is stupid price action completely. But still I see a 1, 2, 3, 4, 5. Okay.
Okay.
So I do think that maximum after reaching this area at maximum, you're going to see a pullback.
Right.
Okay, and then having seen a 5-wave move higher, yes, I will be looking to be long.
So maybe a short-term top after a little more strength in metals ties in with a little more weakness in the dollar, and then a recovery in the dollar and a pullback in the metals.
Yes.
Okay.
Okay. So I think that that covers your long since 840. That's let me see also the level. Yeah, that's a freaking good trade.
Yeah.
Mate, you killed it. Honestly, you killed it. You killed it. I mean,
where do I wire? You handle managed accounts. Where do I wire my money?
Yeah, you killed it. Honestly, I mean, you took a perfect trade here. Okay, and you know where your stop loss is. Your stop loss currently, from an elite wave perspective, your stop loss should be at around 870. Because you don't want to see a fourth wave into the first wave territory. So if you see a move below 870, you know that you shouldn't like it. Okay, so if I was you, but I'm only speaking for myself, I will have already trailed my stop loss there, around 30 bucks in the money.
So Adam's in the house. I see you, Adam. We'll get started in 2 minutes.
By the way, for people that are just logging in, because we had less attendance today, which I expected, because it's the first day we moved the webinar 1 hour earlier. I want to remind everybody that's coming in right now. We said it plenty of times, you know, during the last month, but I understand that you didn't remember. You know, habit is, you know, a thing that shows persistence always. That since today we're starting 1 hour earlier. So please try to remember, you'll see the email is also coming, the email reminder is also coming 1 hour earlier, of course. So starting tomorrow, try to remember that we're starting one hour earlier, and you know, we'll be happy to see you there again. So have a wonderful interview with Adam. I'm definitely going to be hearing in. He always has interesting stuff to share. Thank you, Dale.
Thank you, Steve. And I'm hoping
for the rest of the questions, which are a lot, we're going to see them tomorrow, guys and girls. You know, I'm already writing them down, so we're going to go over them tomorrow.
Hope your son feels better, Steve, so you feel better.
Thank you.
All right, buddy. So Adam, welcome back to Face, my friend. I'm making you the presenter. Thank you so much for adjusting to our new start times here, Adam. Just waiting to hear you. There you are.
Okay, you got me here?
Yeah, I got you, Adam. How are you?
Good.
Are you on the road somewhere?
I'm on the road today. Can you see me okay?
Where are you going? Where are you going, buddy?
I'm back. I'm in Quebec here at the moment, staying for a month, so just working on the road for a little bit.
Okay.
You know, having a great time.
Are you pulling an Airstream and just driving around Canada or what?
Yeah, something like that. Got the family
Right.
there. There we go. I got the picture should come up here in a second.
Oh, okay.
Yeah, taking a little break with the family. Not really taking a break, but it's just nice to be able to go on the road and pack things up. And yeah, just actually got here last night, so it's been a little bit of a hectic morning getting things set up. But got a nice little setup here for the road. So you know, it's always nice to change it up. Gives you a little boost of energy. Yeah, my wife found a great spot here, so happy to be on the road.
Trade from a new venue. So at first, Adam, I'd like to acknowledge what you said in our last interview. Seasonally, you were looking for yen strength, which meant U.S. dollar, Japanese yen weakness. Kudos right there. And and you were talking about you just have to stay long the euro, and they're not going to give you a big break tenter, and that's exactly what happened. And here we are now. So great calls. The first question I have really comes from Blake. We have BOE Thursday. What do you think Carney's going to do? And cable compared to euro has been demonstrating a lot of relative weakness. You know, it's been grinding, really hasn't had the same type of acceleration. So we're interested in Adam Button's view of whether Carney is going to actually make a move and raise rates. And if he does, what do you think can happen? And if he doesn't, what do you think is going to happen?
Right. If we wind it back up, I mean, the Bank of England, like a lot of central banks, took this hawkish step, right? And now the market's sort of thinking, well, they might not do it. One thing is that they've added a new member to the MPC. It sounds like he might be a little bit dovish. He warned a lot about breakfast. He warned a lot about Brexit, and so that could swing the votes a little bit back towards Carney. And I think there is this worry about sterling strength at the moment, and they're seeing it happen to other central banks. And
they don't want a stronger cable.
Well, nobody seems to want it, right? And the other, seasonally, I don't know if you want to get into seasonals yet, but it is the worst month on the calendar for sterling. August, I think, is 10 of the last 12 August. Sterling's down, an average about 1.05%. So it's seasonals bow to fundamentals at times, but there is a little bit of a seasonal headwind there for sterling for whatever reason.
That's a good heads up.
I think really the BOE does set the tone. And okay, so what's the rush to hike? But we see these mixed messages from Carney again, repeat itself again, because it was at the Mansion House speech again that he was hawkish, and even since then, and he's had to reel it back. He's kind of reeled it back himself already. The data's been so especially in
squishy.
Let's wait and see how the inflation numbers come out.
It sounds to me like you don't think. Yeah, it sounds to me, and I think did you say breakfast instead of Brexit? Brexit? Because maybe you're hungry. I think it's breakfast. Anyway. So.
Breakfast.
So anyway, so it seems to me like you think we're basically, he's not going to do anything.
Why, right? It's August. Nobody's doing anything in August. You give it the wait and see kind of month. But you look at the chart. I mean, it looks pretty good for the next little bit. So I'm not really eager to bet against it. I think it's one of those trades that if he does come out dovish or neutral, then there's a bit of time to get in and you let it run a little ways, because it's not really a great spot to sell it going into the announcement, unless we'll see what it looks like on Thursday.
Yeah,
but
the only thing I think about is if a instrument can't perform when it has tailwinds, like a weak dollar, what's going to happen if the dollar catches a bid? And I'm not saying we're there today, but I don't think we're too far away before we're due for some type of decent reaction in the dollar. If cable can't rally in a weak dollar environment, what's it going to do if the Dixie recovers to 95 or 96?
Yes, I'm in the same camp. The dollar, there's going to be a bounce, and you would have thought it might have come already, and August doesn't look so great for it either, but maybe in the next 6 weeks or into September, or if there's some risk emerging even.
Is August kind of a negative month for most instruments? What instruments are positive during the month of August?
Yeah, I mean, a few things come through. It's a very neutral month if you look at the dollar, the euro, and the yen. There isn't a lot to pick up on. If you look at the last few years especially, it's a month of high volatility, even stretching back 10 years. If you remember back a couple years ago, there were China worries, and then last year there was a bit of a spike as well. And that may skew it a little bit. But, intuitively, August is the non-volatility month, right? Because it's vacation month. But that it doesn't really bear out. And I guess you have that thinner market, so the volatility whenever it hits is a little bit more aggressive. And certainly the market is set up for some volatility. We saw a little bit last week, and the trade has continued to be to fade volatility, but you can get a pretty hard squeeze when everyone's trying to buy the dip. And
especially when things are thin like this in August.
Exactly. So there is that there, and I think you'll see it in the bond market first, or it could be in China first again. The volatility can come from anywhere, politics, right?
Yes.
So we'll see.
Speaking about volatility, the Middle East, have any feelings firmed up about what you see happening there geo-wise? Because I want to talk about the oil.
Yeah, we touched on Qatar last time, and oil has been a good trade. I'm not sure that's the impetus behind it. Venezuela, it turns out. I mean, that's the thing about oil and politics is it's oil.
For people.
If you're looking for oil, the best place to look is where there's political instability.
Right.
Because it always seems to be oil where there's political instability. I think, well, maybe it's more the oil that brings that, but
because there are some noises that I'm hearing on the news about that the current administration really is already accusing Iran of non-compliance. Okay, and the Europeans believe they are complying. It's almost like, trying to pick a fight. There's been some naval action, where they're shooting at each other, warning shots, etc. So I was wondering if you still thought that could be a flashpoint, and that's the key. I'd be interested in what you see in oil. Nick was pretty good with calling the low there, and she was looking for 50, so we're at her targets. I was wondering what you thought. Is this another bear market rally in crude oil, Adam? Or has it changed?
Yeah, seasonally it is a weak time of year. Inventories are going to begin to reverse, but you have this Venezuela tailwind. When you talk about Iran and Saudi Arabia, I mean, America has chosen its side in that battle, and Saudi Arabia may press its position with the new crown prince there. So the risks geopolitically are always high, though, and are they especially high at the moment in the Middle East? You could argue there's that new uncertainty with the new president and what they might do. But that's, again, I think that's a headline trade. But technically, it looks pretty good too. Oil has made a nice little run. I mean, at the sterling chart up there. I'm not sure you can see my charts, but I'll.
You got it.
Yeah, there's not a lot drawn on it, but just a quick look while we're talking about oil. I mean, that's a nice run. I mean, if you run and you take that trend line, and I think it was the 100-day moving average, it cuts right through there. We busted above that on Thursday or Friday. There's not a lot to dislike in the chart. Maybe it's a little bit too much momentum. But
it's like a huge range. It's if you're a range trader, oil's been great, hasn't it?
Yeah.
All you have to do is wait for top of the range. bottom of the range. Any views on what's happening in commodity currencies? You know, the loonie has been so strong, and you know, we're trading this 125 level. You know, I know some technicians eventually are looking for maybe 116 before it, you know, this bear phase is over, but doesn't look overdone to you that we could get some type of reaction, like when the dollar turns, Canada gets popped too, and maybe crude comes down to support that idea from 50.
I mean, you don't catch a falling knife, and that has been a tough one in dollar CAD. Every time it looks like it might look like it might turn on Thursday, and then GDP comes out and it's super strong again. But the Bank of Canada isn't going to like this 10-cent one-way move. And in terms of 116, I mean, that's a 20-cent one-way move. I mean, that's really, unless you're, you know, you don't get that kind of move on a couple central bank hikes. So, you know, I'm not sure on the timing. Maybe it flattens out a little bit and bounces. It's the specs have got a little long, and the CFTC numbers on Friday were now at a net, I think, about 25K. Long after being net short almost 100K, you know, a month and a half.
Boy, that's what's really helped set up the decline, was the wrong-footedness in the market and the positioning, don't you think? You know, the 150 bulls got punched.
It was, and it kind of broke out technically above that 135, 136 range, and the euro was a little bit along the same kind of trade where it looked like it was breaking down below the range. And you get the biggest moves sometimes, that you get that false breakout, and it runs in the other direction. And of course, all the data is lined up as well. But you know, Canadian dollar, I don't think you can buy it at these levels. I mean, that seems crazy not to wait till at least 127. I'd be interested to see.
Right. Okay.
You know, it's a big week of news. I mean, America just needs one little data point to show a good uptick in inflation, and the dollar could bounce. You know, the dollar bulls are
we'll have to wait
always
for the NFP? What fundamental reports do you think could set up a catalyst for a dollar recovery here?
Well, the wage growth on Friday and non-farm payrolls is the big one. That's the biggest number in markets, is that hourly wage growth in non-farm payrolls. And also, you know, you talk to people, the dollar bulls are always there. You talk to CAD, you know, real money traders. The buyers they're happy to stay in dollars, and there's always this impetus to load up in dollars, US dollars, and ride out, you know, commodity currency weakness. There's just that stability there, especially here in Canada. So I don't think there's that much left in it for now, and you know, you're getting at long-term dollar buyers, even at 125, are happy to take it. In terms of the bigger picture on commodity currencies, it's seasonally for Canadian dollar, not much happening this month, but for the Australian dollar, it's the weakest or second weakest month on the calendar over 10 or 20-year periods. And that sets up the RBA meeting is tomorrow. And I think there is this feeling out there that the commodity currency central banks will move together. The RBA will be a little bit more hawkish. But if you go back a couple months ago, I mean, they came out of a very weak first quarter. You know, the numbers haven't been so super strong up until now, and they hate a strong currency. I mean, they're played out on the jawboning. They've talked way too much, and that won't help, but they can certainly stay dovish and put a little bit of a rout on the Australian dollar for a few days. Again, I think it's more you can wait for the headline.
Yeah, is the Kiwi in the same type of position seasonally? Okay.
Exactly.
Because if you look at it, we're at such major resistance here in the Kiwi. We were talking about it earlier in the room, like, you know, the weekly chart or a daily. Yeah, see how we're, you know, right there. It's kind of an ascending triangle. Looks like maybe it could pull back one more time, but we start getting back over 74 and closing above it. It measures way up there.
Yeah, so, I mean, it's all these currencies, right? I mean, you look out and you think, boy, the US dollar is in real trouble. I mean, the euro up above 117, it's pretty daunting when you stand back and you're like, wow, 140. And it wasn't
is it just because The market might think that the Fed is almost done. I mean, I've heard people say, yeah, maybe one more rate hike this year, and that the other central banks are beginning to taper. So we're nearing the end of a interest rate hike cycle, and they're just beginning. Or could it possibly be about confidence in the U.S. economy, or just there are other areas like Europe that just show better signs of growth than the U.S.? What's behind the dollar? I mean, we went from a pretty, bullish environment in the dollar to the dollar, like you said, and we're talking weak against everything.
Right.
What do you think?
I think it's that a lot of that speculative trade getting booted out. I mean, it looked so good at the start of the year. You had this new administration that was going to pass healthcare reform, tax reform, infrastructure. I mean, we've beaten this theme to death, and that isn't really having growth. At the same time, you had these great confidence numbers. I mean, they were out of sight, the spike up in confidence.
So then it's got to be. Then it's probably people betting against this administration getting anything done. And when people say, the U.S. is leaving a vacuum, I think I just lost Adam, at least your picture. Can I hear you? Oh, that's too bad. We'll see if he comes back.
Wait, I was still here?
Oh, okay, you're here. Okay, you're here.
Just dropped the webcam there.
All right, okay, so then basically it's the market betting against the dollar because what's happening here domestically, possibly not getting the agenda done, healthcare failing, all the things they hoped for are just being pulled out from under them. And, the U.S. pulls back, like we say we're not going to import Venezuelan oil. Who's down there to say they'll buy it? Putin.
Right.
Okay, we pull out of
I hear you.
Huh?
You get it. I think what's happening is you can just keep kicking the can down the road, though, on this tax reform story, right? Okay, so it didn't happen this year. Well, it's still going to happen next year. And I think that's why you can't get a big bet against the dollar. That's why you can't get up to these levels. On the other hand, look at the chart. I mean, you don't want to be the guy that sits and says, I don't want to be the guy that sits and says, you buy the dollar because they're going to figure it out in Congress. The U.S. is probably more of a 2.5%, 3% economy than a 1.5% economy. But I mean, the chart is just saying, be careful with the dollar. So, I think I'm willing to stay long the dollar or to cautiously buy the dollar in the hopes that if we get 2 or 3 or 4 good data points, the dollar will rally, 300-400 pips pretty easily, even if it's just a retracement.
Right.
And I think there's just better odds that you get a string of good data because that's all the Fed wants to see. If you look at the bias at the Fed, there are at least 10 people on the Fed that will see 3 or 4 good data points and say, okay, now it's coming. Now the gains are coming. Let's talk about hiking again. And the market can't fight that. The market will pile into US dollar longs on that sort of thing. So just the conviction level, it's hard to have it right now because
it's like everything's a trade now. Not everything's a big position. Everything's a trade, which is usually the way it is anyway. So I'm looking for another new high in euro. Do you have any levels where you think it might?
That is a big trade. The euro is so good. I mean, they figured it out. I think politically there for a little bit. Merkel's going to win. A lot of those risks are behind the market now. Technically, it's magnificent. They're shallow dips. I think that for a long time, especially around 110, 112, everyone was looking back for that pullback to 108, and now they're chasing, and they'll continue to chase because the pullbacks are 200 pips, and I think that's the trade. Just buy any kind of 200 pip or so dip and ride it at least up to 125, and we'll see how the numbers develop. I mean, Nowotny last week, right before Yellen came out for the FOMC or the FOMC statement, was saying some pretty hawkish things. Nowotny is an ECB governing council member, and it came at an odd time, and the euro reacted a little bit. But if Draghi starts to say those same sort of things, and he was sort of like, you know what, of course we're talking about hiking rates, of course we're talking about exiting QE, and everyone knows they are. And just Draghi's just trying to hold this ball like a beach ball underwater for a few more months to keep the euro down, but he's inevitably losing his grip because it's inflating. And then now there are these other central bankers that want to let it pop. And, you know, I don't think you can fight the euro, at least until you get him saying that, because then you have maybe like the sell the fact trade, because the market is just saying, Draghi, you're going to get more hawkish either this month, next month, or whenever, and I can wait until it happens. So, you know, it's like the hangman's noose is coming. So the euro is just beautiful, I think.
So if you think that we're getting close to a dollar buy, even though you're still, you know, you can't short the euro, where's your head at on the US dollar yen, which you were very accurate with last, you know, you could have sold every rally last month. Should we be getting close to some type of buy point in your work in US dollar yen?
Yeah, let me pull it up here while we talk about it. I like it. I think the thing about, you might get this risk aversion trade, which is the risk, but you know, it's just simple. All these 108, 109, 110 levels, they look pretty good in dollar yen. The bond market has been a little stronger than, yields have been a little higher than you might have thought, given some of the flows in the background. It's more of a Fed trade, and I don't think the Bank of Japan is even considering getting more hawkish. And it's the same story in the Swiss franc, which kind of felt like everybody missed that trade, me included, and it just popped because their thinking is they're stuck to the floor, and you just buy it against the basket. So I think, you know, selling the yen or buying yen crosses to make it a little easier to understand, buying Swiss franc crosses, it's those are the sort of long-term trades that you just buy it and get out of the way if there's some real risk aversion. But they look good now. You know, you've had that pullback that you would have wanted a month ago, because I don't see a big reason for it to continue. But that was really something in the Swiss franc, and I think it's just a matter of time till it happens in the yen along the same lines.
Interesting. Okay, so Swiss leading the way of what the yen could do. You know, actually, our own Steve Volge saw that. He was telling people, don't try and top pick the euro, buy US dollar Swiss. And and the euro Swiss had a breakout too, Adam. So euro Swiss, there it is. Yeah.
That was so nice, right? In your technical trader, you see that. I mean, you fall in love with text all over again. It just very simply broke out of the range and tacked on another, 200-300 pips. In a really one-way move. I mean, how big were the pullbacks in that? Like 25 pips at most. It's slowing down a little bit today, but we're at month end, new month tomorrow, and there'll be a little bit of a shakedown there, and then maybe even till after non-farm payrolls on Friday. But you know, we'll watch for that volatility in August. You never know where it comes from, though. There's certainly a few candidates, and
are equities one of the candidates?
Of course, but I think it's crazy. I just watched Twitter, and how many people on Thursday called the top? Like Amazon, you always find a reason. Oh, Jeff Bezos is the world's richest man. Oh, that's the top in equities, and sell the NASDAQ. You know, by the end of the day, it was back to flat. Like, it's crazy. As long as you have these people saying this is the top, like the chorus of people calling the top on a 15-pip dip, a 15-point dip in the S&P 500 was just insane. And I was almost mocking it that same day.
Well, we're not at new highs yet. Right. But we have retraced 78.6 already. So
it's tough to be bearish, right?
Yeah. Well, I saw a 3-driver last week. You know, I'm a one-trick pony. But I'll tell you what. You're not. You're a Renaissance man, Adam Button.
Well, I'm enjoying this August away, and I encourage people to, if they, that's Forex, right? You can take it with you. And it's a nice way to see the world. Of course, you're staring at computer screens in a different location, but it's nice.
Yeah, but you're in a different, you know what? It's a great model that you're representing to people, because it's so important to recharge yourself in this business, or the battery runs dry and you burn out, and then you're not making clear-headed decisions, and you get impulsive, and all the bad habits begin to reappear. So glad you're enjoying your life, Adam, and thank you so much for edifying us again today. I look forward to talking to you. Miss you when I go ahead and book my schedule and forget to put you in. But really, thank you so much for showing up on the road for us. A lot of people on vacation wouldn't do that. So you're really a giving spirit. You've always supported me in my efforts, and you help every community I've ever been a part of. Thank you, buddy. And enjoy your.
I hope we can do it in San Diego. You're still down in San Diego, right?
Yeah, I'm in Temecula now, a little inland from the coast now, but yeah.
That sounds all right. We can. They've got internet connections there, so.
Yeah, wine country. It's where they grow the wine, and it's the home of the Bing cherry. So that's its claim to fame. In fact, it was founded in like 1805, and now I know why. Because I thought I'd be looking at weather, like the desert, and it's not. I mean, I hardly have used my air conditioning here. So anyway, buddy, enjoy your family, and I hope pips rain down on you on this trip, and let's get back together soon, all right?
Okay, Dale, have a great month. Everyone else, happy to answer any questions.
So you can follow Adam at Forex Live at FX_button. Him and his partner Greg Mikulowski, they're one of the best teams out there, and as you can tell, Adam knows his stuff. So thanks again, Adam. Thanks again, Faith. Thank you, Steve and Blake and the whole team for adding 9 3-3s on the service. 9 more pairs for you guys to watch. Click the link and try the trial subscription. And we'll see everyone for Turnaround Tuesday. Remember, most of all, tell people that you care about how you feel. People aren't mind readers. And don't just count your pips, count your blessings. See you 1 hour earlier now, guys. See you tomorrow. Good hunting.